Oh, she caught me. I was about to go for a sip of coffee. But what are we doing today, man?
Money Mondays. Welcome, everybody. Money Mondays, your charming host, Ferris, and his sidekick, Ben.
Ouch.
How's it going, everybody?
Ouch. They're just going to call me the bald one.
No, I figured I would not say that, but since you brought it up, your four hairs are looking great today, Ben.
Thanks, buddy. I'm trying to grow them out. I'm going to do like this whole thing, like where I have like, I'm like the guy that has a couple hairs just kind of coming across the top of his head.
Well, my uncle did. I did have an uncle go to Turkey and get the hair implants.
Oh,
so I'll let you know, fill you in how that goes, all right?
Oh, yeah,
hopefully
Turkey.
I can keep my hair. Maybe we don't have to do it together. You can do that one yourself. But
the world hair transplant capital of the world, from what we hear.
That is true.
I've been told that several times. I don't know why people keep bringing that up with me. But why are we doing there? What are we talking about today?
Talking
Investor
about
call
the
basics?
fun side and sometimes not so fun side, which is investor calls, right?
I think it's
What do
fun.
they look
I
like?
I like raising money.
It's fun talking to investors and
Yes.
just catching up, right? Most of our investors are very savvy people. They're doing interesting things. They're very smart people, educated people.
Yeah.
They've thought about details of things that we haven't gotten to.
Yeah.
And so it is actually usually pretty enjoyable, right?
No,
And
no,
so
we
just
love-
talking through that whole process, right? Some people aren't comfortable talking to investors. They're not comfortable trying to raise money, but it's an art. And
So before we hop into it, let's take a step back. So what we talk about a lot on this show is syndication, folks. So if you're just first time tuning in, don't know what the heck is syndication, right? We pull money together, we raise equity from multiple investors, pull it together, and then we use that to buy bigger and better properties, right? So
yeah.
we have
so
to
if Ben
talk.
had $50,000 to invest, he could buy a $200,000 house,
Yes.
roughly. Right? If Ben and 9 of his other friends had $50,000 to invest, they'd have $500,000 to put down, right? Which means they could buy a $2 million property. What?
Okay, so with a 9 of his additional
That's why I
friends.
said 9. So 10 people total,
Okay,
each
I was
person
like-
50.
I was like, why'd you have to do some
$500,000
random
down,
number?
$500,000 down gets you about $2 million of an acquisition price.
Yes.
So again, bigger property, and usually as you get bigger, you get past the size of, is it too small to have a full-time employee or not, right?
Yeah.
So you're kind of...
So we're using leverage, folks, right? So we leverage debt. We also leverage equity. We leverage other people's experience too. That's why you have people on your team that know things that you might not know, right? So this is all about, you've got a deal in hand. You need to go talk to investors. You need to raise money, right? So what are some of the investor call basics, right? Now in the past, to give you guys some perspective, we used to do live webinars. Right? We no longer do that. Not that we wouldn't say that we wouldn't do that in the future. Just right now, we typically will film them here in the studio. Right? We clean them up, we polish them up, we add in our graphics and do all the snazzy stuff that Shannon and her team do. And then we typically will send that out. And we'll typically have some FAQs of questions that we typically always get on every single deal. How much are you investing? How much are you increasing income? And just various other things that investors always ask us on every single deal. Right? So it's important to kind of have those in there. But that doesn't mean that we don't have to have investor calls, right? Because we send these out as part of emails. We invite people to review and actually look at the webinar, and then they're going to come back with questions. Then we set that up with our team. We've got Tarek and his investor relations team here at Disrupt Equity, and they typically field calls. Me and Ferris also do the same thing. A lot of the people on our list have met me and Ferris personally.
Yeah.
So that doesn't mean that they're going to go straight over to Tarek, right?
You can't hand off a relationship, right?
No, you absolutely can. You don't want to, right? I think that's one of the things that you got to be careful about as you scale, is to not forget about the people that you met along the way that got you to the point, right? And so if an investor ever wants to have a conversation with me, I always have my cell phone right there. They can always text me, call me. We can set up a call. I'm always available and transparent and candid with people, and approachable. And I think that that's important as we kind of dive into this topic here. Yeah. So, how do you prepare for an investor call?
I think the first thing is understand your deal, right?
Yeah.
Most of the reason that investors,
important.
you're hopping on a call with investors, right? Our emails tell everything about it, right?
We do.
It tells the
We
returns that we're expecting, tells a little bit of the story. But what investors want to hop on is, understand, does this person sound confident, right? Is this somebody that I like, know, and trust, right? And then more importantly, they want to hear the story of the deal.
Yes.
And so if you really understand it, you can actually paint the story, right? It's like the difference between the person that's book smart versus, real street smart,
Yeah.
right? Book smart, great, I read this thing, but if I actually know the stuff, the material very thoroughly, I can sell it, I can explain it, and that comes off, right? Whenever you're talking to investors, it's the difference between the guy that has to go read the notes. Oh, it's it's in a good submarket. It's called Woodlands, at the north side of Houston. Versus saying, hey, it's in the Woodlands, one of the best parts of Houston. Tons going on. You have excellent.
What do the brokers speak? Value add and below replacement cost. Like you're not there to kind of regurgitate the talking points that either.
If they wanted the talking points, they could read the email, which has the talking points.
So really, when we get on and talk about it, what I'm preparing is, okay, what's the story here, right? How do we find the deal? How do we negotiate the deal? How are we structuring the capital stack? Why do we think this is a great area and a great deal and a great team? Because that's really what an investor, they want to go beyond the statistics that you have in an email or investor deck, right? And I think that that's important. The other thing that typically I'm going to have the more savvy investors ask me is, how are you mitigating risk? Right? What are some of the things, some challenges that could pop up, and how are you mitigating that, right? Because at the end of the day, we've talked about this on the show before, right? It's return of capital before return on capital. And what the heck does that even mean? That means that people don't want to lose any money. If anything, they just want their money back. 5 years, nothing happens, the whole thing implodes, whatever, they don't want to lose any money. So we have more savvy investors, they talk about that, right? How much is the dirt worth, right? What kind of insurance do you have on the property? They're thinking worst case scenario, the damn thing blows down from a Cat 5 hurricane, and how much can we sell the land for, right? I've actually had people, actually ask me, what is the price of the land? And that's because they're looking in their mind, worst case scenario, am I going to get my money back out of this thing? So you need to prepare and have those talking points available. And again, don't regurgitate your investor deck, right? So how do you handle investor concerns in today's choppy market? I think it's all about interest rates and inflation, right?
Explain how you're mitigating risk, right? That was literally the first slide we had on our last presentation.
Yeah.
Here's what we're doing to reduce risk in this investment, right? There's risk in any investment, but what are the things that we can help not control, but refine, maybe is the word I'm going to use, right? Yeah. Interest rates being one of them, right? Here's the cap that we're buying. Here's how long it's going to happen. Here's how we're going to do the refi. Here's what our reserves look like. Really talk through all that, right? And again, investors
get ahead of it.
I was going to say they want to just know that you've already thought through, right? Because an investor has thought about the deal a lot less than you. And if they ask you questions that you haven't thought about, that's a problem, right?
It is actually a big problem, and I think a lot of people they don't see the forest through the trees, right? And so they forget that they're so excited to have a deal under contract that they forget that, hey, this is some people's hard-earned money, and they're going to think about these things, right? And if all they're watching is CNN or Fox News every night, they're going to be scared about inflation. They're going to be scared about interest rates. So you need to be talking about the fundamentals of multifamily investing is still very, very sound and strong, right? That we're underwriting these deals to the increased interest rates, that we have interest rate caps in place, right? Inflation is actually a good thing if you can hedge it against commercial real estate, right? Because we get to re-rack rents every 12 months. So our expenses go up, well, guess what? Our revenue is going to go up too, which is different than office and some of these industrial plays where you're locked in for 3, 5, 7, 10-year plays in some cases, where you're stuck eating that same rent for 7 years, but your expenses are going up like this, right? In multifamily, it's easy for us to kind of keep up with the inflation because of that scenario, right? Yeah. So, all right. So how do you build trust with new investors? So let's talk about, you don't have a deal in hand.
Yeah. Well, that's exactly the answer. Is you actually talk to them whenever you don't have a deal in hand.
Yeah.
That's what I was actually going to say. It's like any friend, right? You don't want to go to somebody whenever you're in a time of need, right? Instead, you want to build rapport, and then now you're. If there's a deal that comes along, you're really trying to position as, hey, here's an opportunity for you. And so get to know your investors, right? Take notes on them, right? Understand what's going on in their life. How many kids they have,
I get it.
Do they like to vacation, right? And it's really, that's why we like our meetups. A lot of our investors come out, we get to hang out with them outside of an opportunity.
Yeah, you go have drinks.
Get to know them, know what's going on.
It's just like the brokers, right? I think, again, folks, you can't put these people on pedestals. These are real people. They've got real families. They've got real likes and dislikes. And ultimately, you want to become friends to an extent with your investors too. And actually, we have friends and family members that are in on our deals, right? And people say, oh, you shouldn't do that. Well, I believe in our deals, and in the end, I wouldn't be getting my friends and family in on that if I didn't. So, point is that you need to break down those barriers and kind of get beyond this kind of networking, like, oh, what do you do? And, when did you learn about real estate? Find out about their families, find out about their hobbies, really try to build some rapport there. And I think that breaks down those barriers and builds trust. Yeah. I think the other thing too is really, and this is obviously for people that are a little bit more seasoned, talking about your track record, right?
Yeah, talking about your track record, and then also let investors know each other, right? The best referral is one from another investor. Hey, I've invested with these guys. Here's what they did on this deal. Here's why I like them. Oh, here's what they do better than these other guys, and maybe here's what they don't do as good as the other guys, right? Yeah. It's a little bit of that, and sometimes people try to isolate all their investors versus kind of creating an environment where investors get to meet each other. That's actually usually goes in your favor if you're doing the right things.
And I'd say the one way to really build trust too is be candid about maybe some of your weaknesses too, right? It doesn't have to be this perfect crystalline thing and nothing has ever gone wrong.
Yeah,
right?
No, because investors appreciate you saying, hey, here's what we've made mistakes.
Yeah, I've had people put me on the spot. Tell me about your worst deal. Why was it your worst deal? How did you overcome some of the challenges that you had on that deal? And I think that those are some of the smartest questions that I get from investors, right? Because they're going straight to the oh shit moments, right? What if this happens? What is Ben and Ferris and the Disrupt Equity and Disrupt Management team going to do to solve these problems? Because at the end of the day, some of this stuff is outside of our control, right? Nobody knew about COVID. There's natural disasters that happen. There's fires that happen at these properties. We can't control that. We can underwrite these deals as effectively as we possibly can. We can buy them right. We can put the right debt on it, have the right capital stack, but you can still have a hurricane, Cat 5 come through, and the flooding is all there, and what are you going to do? Right, at the end of the day, you're still going to have those problems that you're going to have to come across, and and I think that's important. That builds trust, that transparency, that candidness that we're known for. People love that, and that's why we've been able to attract a lot of good people to our sphere, and those people trust us, right? And we take our fiduciary commitment very, very seriously. So moving right along. All right. So how do you handle when deals might not go the right way or the way that you project?
Actually, really quick before we answer that. Money Mondays, we do this every Monday, 3:30 Central. If you have comments, questions, we can answer them live. I'm going to go through a few, then we can go back to your question. Let's see. Anderson says, hey, my friends, always glad to see you guys. Thanks, Anderson.
Thank you.
Thanks for tuning in. Ronnie says investor calls are his favorite. Absolutely they are.
Ronnie I know Ronnie likes those calls, man. That guy's about as diligent as it comes with those follow-ups.
What do y'all do to automate the investor relation process? I think it's really, let's see, tracking when you talk to people, right? And try to do the follow-up. We have some.
And we're getting better at this. I think that there's definitely some automations that we're trying to do to be a little bit more on top of it and track it a little bit.
And more about getting to know your investors better, right?
Yes. Taking notes. Where did you meet this person? And again, what are their hobbies? And some things that you can kind of, paint a picture of this person, right? And then track that accordingly, right? You might find out that these 5 people that you just talked to, they all like Class A deals in Houston. Okay, you're really starting to find out a little bit more about what their buy box is, and you can talk to them more effectively, right? But I think the investor relations process, especially when you get as many leads as we do, has to be automated. It has to be streamlined, and we're working through that. That's one of those things that we're continually kind of trying to get better at, right? But I think the first thing that we did was we hired on more people, too, right? You always have to have more people in order to field those incoming leads, which these are really our clients, our customers, or prospective customers.
All right, let's keep going. Trevor says, when you do investor calls, do you talk about things that aren't going great, and how do you plan to turn around? Depends on the deal or what you're talking about, right? Thankfully, most deals have done well, but like Ben said earlier, it's good to be a little, what's the word? To show some humility, right? Show, hey, here's what we've done wrong. Here's what we should do. We had a deal that we literally refied that we sold a year later. That was a mistake. But again, at the time, it was the right decision, and here's why, right?
Yeah, we still did very good.
Yeah, we were still in COVID. We didn't know we'd sell the deal in a year. So again, you make mistakes, you live and learn, and you get smarter about it, right? And so what is perfect, and I think investors appreciate that. It's really about, here's the challenge, here was the solution, and did the person work through it, right? So,
I think bottom line, the big thing is again, be transparent and candid with your investors. People want to see that you're being truthful, right? Yep. And I wish that every single deal was a home run, folks. They're not. And again, some of that stuff is in our control, some of it's not. And so, if somebody ever asked me that, I probably wouldn't be, it's not necessarily you want to highlight your challenges or some of the things that but if somebody asked me that, I'd be more than willing to talk to them about that, right?
Absolutely.
So a couple of questions that kind of came in before the show.
A couple more.
My gosh, we have actual people that are asking questions
let's
today?
Let's see, Ronnie says, thoughts on 506, he said one more, sorry. Calendly is a solid tool for fielding investor calls. It has a good integration with ActiveCampaign as well.
You said Calendly?
Yeah.
Okay, so that's a calendar app. People probably have seen it. Yeah. Definitely, I would say that does keep you organized when you're doing your follow-ups.
Let's keep going. Thoughts on 506C marketing outside of email campaigns. One thing we haven't done that's on our bucket list is to buy a billboard off the side of the highway. One day we're going to do that.
We've been talking about that for 5 years.
But there's other things.
We could. They're really not that expensive.
One time we'll do it.
It's like 10 or 15K for a few months.
The bigger problem is timing. It's like the deal shows up and you don't know you're going to have the deal, and it just. The billboard is not immediately.
It's like interested in apartments.
If I find the right digital billboard where they can just, hey, I need it, and then 2 days later it's live, that could work. Versus like having to get the stuff printed, having to get it glued up. So, but anyways, outside of that, you have a lot of other ways to market. Obviously, that's the pipe tree. But social media is the most common. Right? Ads, being, other people have done other things. You heard about radio and some other options too.
Yeah, I mean, I would say the one thing that I would say, especially if you're starting off. Don't do a 506C just because you can go post it on social media. We have done this and we have failed miserably. We have done it and we've been successful. The difference between the two is that you really have to have a full-blown marketing ad campaign. You have to have a funnel. You have to have the people behind the funnel to track all those leads coming in. And ultimately, those ads have to have the right message there. And getting those ads up on Facebook and on some of these other social media channels are very, very challenging. Right? So if you don't know anything about that, you don't have the staff, you don't know anything really about marketing, don't just think that you're going to, have some piffy, comment on a Facebook post or, make a post on, LinkedIn and then they're just going to have millions of dollars thrown at you. It doesn't work like that, folks. And so I'd say 95% of the deals that are done out there are 506B, and those are with people that you have a pre-existing relationship with. Right, 506C is a little bit more challenging, and it's only for accredited investors.
Let's keep
be
going.
Very careful of that. All right.
Sorry. I mean, let me keep going.
Oh, whoa.
That'll just keep yapping. Let's see. Amazing guys conversation, guys. Amazing. Thank you for doing the best to sharing. I can't read her. Thanks for doing the best to sharing your best thoughts and advice. You guys rock the boat.
Okay.
Thank you for that, Anderson. Appreciate that.
Thank you.
Have you guys had any experience with properties affected by hurricanes or tornadoes/flood? I'll let you roll this one, Ben.
All right. Well, we do have a deal in Florida, and it did have some hurricane damage. We've also had properties that have flooded during Hurricane Harvey.
That had a lot of flooding damage.
To the tune of millions of dollars of damage. So yes, bottom line, being in Houston and having properties along the southeast, we are very, very familiar with hurricanes. Not as much tornadoes. I think that's kind of probably more north of us, but it's all the same thing, right? You can't control it. All you can do is you have to be properly insured. You have to hunker down, and you have to do a little hope and a prayer, right? Luckily the deal that was in Daytona, here recently with the Hurricane Ian that just went through, didn't get damaged that much, but we're still trying to figure out exactly how much that is. So yes, we do have a lot of experience. Again, it's all about being properly insured when it comes to this stuff, right? All right. Any more questions?
Let's keep going. There was definitely a little bit more. So
a lot of chatter on this one, man.
I know.
I like it.
Thoughts on syndication tokenization? It's the third time I get asked that in the past 3 weeks.
This is some crazy questions today.
Interesting concept. It's still in its infancy. Still a lot more details to figure out, but I think definitely possibility, especially around giving liquidity options to investors.
Yes.
That's where it becomes attractive, I think.
I'd say the SEC is definitely still working through the nuances of that process, so just be very, very careful. One of our really, really good friends, Michael Flight with Liberty Fund, does a lot of stuff and actually just had a blockchain summit in Austin talking about some of this stuff. But we love it from the liquidity standpoint. Again, it's very, very much in its infancy. I don't even know if it's not even like the end of the first inning. It's like the first batter up. If you're looking at kind of baseball terminology, right? So, but great question.
And let's see, one more. How's your process with investor calls with institutional investors? I'd say with institutions is a whole other animal. I mean, you're not. It's a very planned environment. Very. What's the word?
It's B2B versus B2C.
Yeah,
right?
So you're going to have strategic, We're
going to have a pitch deck.
Yeah.
We're going to be in the boardroom. We're probably going to be a little bit dressed up. We're going to be buttoned up, right? Because those guys and gals are a little bit more sophisticated. They're going to ask more poignant questions. A lot of what they like to kind of get you on is track record, how long have you been in the game for, how much money have you raised, how much assets under management. They're all about, if you're in the club, you're in the club, right? But getting into that club is very, very difficult. So it's a different planning process. We have done several of them. Some of them have gone actually very, very well. We've actually turned down money. But at the end of the day, just know that with the private equity money comes a little bit of golden handcuffs too, right? There's a lot of gotchas in that term sheet. So just be careful.
All right, let's do another one. What is tokenization? So Bitcoin, long story short, whenever we sell, whenever we raise an investment, we're selling shares, right? Investors own shares. Tokenization is, if you know anything about Bitcoin, you probably know about, essentially the concept of, and I just totally blanked out, the blockchain. Thank you. And basically, think of it as a public ledger that the world can see, right? So I can record and say, this person owns this thing, right? Yes. Tokenization is the art of applying that to title and ownership of shares, right? So you can say this, these 50 shares are owned by Ben, and then Ben in a year can say, he's going to sell them to Joe, publicly to the world. Hey, Joe now owns these, right? There's a transaction
that is documented.
It's a ledger that the world can see. That's in a nutshell what it is.
Yeah.
Otherwise, let's keep going. Let's do one more question on the screen, and then let's keep going to the next.
All right. So, how do you lead investors closer to the point of investing and conversion, right? So this is how you close the deal, right? And it's very much almost like a sale process, right? You're gonna, hey, how do you want to go about this conversation? What questions do you want to, have answered? Have you reviewed the information ahead of time, right? You don't want it to be a waste of time on either side, right? But you want to walk away from that call with some kind of a commitment. Right, and maybe it's a commitment that they will invest in your next project. Maybe it's a commitment that they will invest in your current project that you're raising money for right now, right? But you don't want people just to, and we've had them, we continually have them to this day, to essentially just bounce questions off of you because they're just trying to learn off of you, right? They have no intention of ever investing. They're just tire kickers. And so you have to be very, very careful in vetting people ahead of time, and then ultimately getting some kind of a commitment. Doing that soft close, for people that know the sales process, get them to commit to something.
By selling them an opportunity.
Yeah, you're selling them an opportunity, right? Again, you're not asking them for money, you're not begging them for money. You're giving them the opportunity to invest in a great project, and it's a very, very, very scarce, investment too, right? There's not a lot of people that are allowed into these things, and so you have to kind of play that up and get people to take action. Is the most important thing. All right.
Let's see, you got a few. Let's do two more and we'll call it a day.
All right.
Would you say avoiding institutional as much as possible?
No, I wouldn't say. There's not a right or wrong answer, folks. Right? We obviously explore those as they come along as well. We've exclusively done retail, investors to this date. High net worth, sophisticated investors, accredited investors. But there is a point in the market for private equity and some of these more institutional firms, right? And I think you just have to know what you're getting yourself into. You got one person that you're beholden to, but if things go awry, like we talked about, sometimes they do, they could take your deal over. They could push you out, right? And you do all this work and then they push you out of the deal. That could be a big problem, right? And typically they're not going to do 100% of the equity either. Right? So don't assume that they're going to write that one check. Typically they'll do 60, 70, 80%, especially to start off with. You still have to bring that other amount to the table, whether it's out of your own pocket or you got to go raise the money. And just so you have to understand, right, in some circumstances, that private equity money is higher on the capital stack than your retail investors. So just be careful, right? Pros and cons to both sides.
Absolutely. And then one last question from YouTube. The question is, how was your first deal?
That was the deal that flooded during Hurricane Harvey. So we bought it back in 2015. Hurricane Harvey, for those that don't remember, was a storm that came through in 2017 and flooded pretty much all of Southeast Texas, including Beaumont, which is where our deal was. And for most of the whole entire property flooded on the first floor. So 32 units. We had to terminate the leases. We had to pretty much gut the whole entire property. Everybody that had parked at the property lost their car. It was a very challenging time. But ultimately, we were able to get money from FEMA. We had a flood insurance policy. Again, mitigating risk. We had the proper insurance on it. And we were able to ultimately work through the construction, got it leased back up, and we ended up selling it. That was our most profitable deal. And so first deal, learned probably everything you could possibly learn and did it all the wrong way. But you can only learn by doing sometimes.
Live and learn. All right, let's keep going then.
All right, boom. So talking about raising money, right? We're coming up, our next meetup, right? This is the topic for the week.
Topic
how
for the week.
to raise capital for real estate deals. So we got our very own Tarek Musa from Disrupt Equity, who helps lead our investor relations team. And then we have Mr. David DeVinco as well out of Austin, who's a good friend, a client, and a great syndicator.
Of money. So we definitely can talk about, ways to raise money. How do you do it? How do you pitch? What goes well? What doesn't? What's easy? What's hard? So definitely come check it out. Chance to come, and we'll be there too. So chance to come hang out with us, relax, meet some investors, meet some other operators.
So October 6th, with this Thursday at 7 p.m. at Wakefield Crowbar. It's a new venue. Really, really excited about it. Going to be even better than the last one. We had about 150 people last time. It's got good food, good booze there too. But check it out. Go ahead and register at disruptequity.com/HTX meetup. Again, how to raise money for your real estate deals with some rock stars in the industry telling us all the secrets. But we got another webinar too, man. This is rolling around.
Absolutely. But before you talk about that, let's do a few more comments, questions.
Okay.
Chris Collins says, dang, sorry to have missed the bulk of this one. Going to check out the replay for sure. Anderson says, damn, I always love how you guys handle the questions on the show. Well done. Chris says, if you're still fielding questions, which we are, this will be the last question we do you treat every investor call the same as far as following a format, or do you free flow them more? I'd say we free flow them more. Our investor relations,
it's kind of just how we are.
Our investor relations team is probably more structure
they're definitely
driven.
more structured.
But that's because we know our investors for years much more thoroughly than they may know them. So I'd say it depends.
Yeah, I would say, but I mean, if you have a lot coming in and you need to keep it to a certain amount of time, I would say the one thing that we try to do is we do try to block it off, right? Because some people will get on and they just have all the time in the world. They'll pick your brain for 2 hours if you let them, right? So I'd say cherish your time, right? And say, okay, we can spend 30 minutes. But let them kind of dictate a little bit, right? Especially if it's in between deals and it's just to get to know people. I typically, like I said earlier, like if it's a high net worth person that's willing to invest a lot more, or it's a private equity company, I'm probably going to prepare and have some talking points ahead of time as well, right? But if it's just a regular sophisticated investor, I'm just going to roll in there, see how they, what their background is, how much real estate investing they've done in the past, and then ultimately see if it's a good fit. Remember, folks, you don't have to take their money, right? If you just don't get a good vibe from somebody, you just know this person is just going to be a pain in the butt, don't do it. Please, I'm telling you, this is coming from experience. But any more questions?
Let's just keep going. That's enough. So we're already over time.
All right. So we wanted to kind of talk about our webinar series that we do this every month. Multifamily real estate financing strategies in today's debt market is going to be next Wednesday, October 12th, 7:30 p.m. Central Standard. Check that out, disruptequity.com/virtual meetup. We got the Mr. Anton Matley from Peak Financing. He's our mortgage broker that helps us on all of our deals, does a great job, and really, really savant on this whole stuff. I mean, he has been through multiple market cycles, understands what's happening in the debt market, and ultimately helps you get your deals done even today. So, boom. Oh my gosh, buy one, get one free, get $150 off? Shanna, come on. Seriously, we're trying to make...
Sold out of VIP tickets.
Oh, and we sold out of VIP. All right. So this is $150 off executive tickets at our MFIN conference, November 12th, 2022 in Atlanta, Georgia.
It's coming on up.
Atlanta.
Month and a half, so it should be exciting. Good time, good people, get the network, get out there, get uncomfortable, be some new people, be some partners.
That's it. So it's all about networking. mfinvestornetwork.com. Use the coupon code DISRUPT and get that $150 off on your executive tickets.
With that said, it's Money Monday. We do this every Monday, 3:30 Central. What are we talking about next week, Ben?
Multifamily market update for October 2022.
All righty, we'll make it happen. Thank you all very much.
See you then.